name is Vlad. I'm your host of EGN podcast. Today we are going to talk about the Liberation Day. It's all over the news. It's a very, I would say, crucial moment in the world currently. And the goal of this video will have to look to see what's going on about it, like what are the details, what it implies specifically. So I'm going to use my helper, my AI friend. I use different ones. There's Perplexity Pro, ChatGPT, there's Grok. But this time we are going to use Grok a little bit. We can change it up afterwards. So let's dive into it to see what's going on. If you never tried it, actually these AIs, they are not bad. The voice mode in some of them is, let's say, not the best. But Grok, the voice is pretty natural. So let's see. Hey there.
Hey, how can I assist you this morning?
Yes, so me and my friends, the audience, we want to learn more about the Liberation Day that just happened a few days ago. So let's start from the basics. What was the Liberation Day mentioned by Trump?
Let's see. All right, so Liberation Day, as Trump called it, was his big announcement on April 2nd about rolling out a bunch of new tariffs. He pitched it as a way to free up the U.S. economy by slapping taxes on imports, saying it'd bring back wealth and protect American industries from foreign competition.
Okay, so basically he added extra tariffs, extra taxes on other countries. Is that correct?
Yep, that's right. Extra tariffs on imports from other countries, all to boost U.S. businesses and pile up some cash domestically. He framed it as a move to break free from what he sees as unfair trade deals.
And why did he call it Liberation Day? Like, what's the meaning behind it?
He called it Liberation Day to spin it as a bold move to free the U.S. from what he claims are economic chains, like bad trade agreements and foreign reliance, pushing the idea that these tariffs would unleash American prosperity and independence. It's all about that dramatic flair, making it sound like a historic turning point.
You say making it sound like historic turning point. So you don't agree with him that that's a historic turning point?
Oh, I'm not taking sides here. I'm just saying he's playing it up big with the name Liberation Day to give it that epic game-changer vibe. Whether it actually turns out historic, well, that's up to how it all shakes out down the road.
Okay, so as you said, he's putting tariffs on other countries. Let's go through those tariffs. Like, what are the tariffs and what are the countries impacted? And then we'll go to the sectors.
1 second. Sure thing. So, Trump kicked off with a universal 10% tariff on all imports starting April 5th. Pretty much every country trading with the U.S. gets hit, unless there's an exception, like certain energy stuff. Then, he cranked it up with bigger reciprocal tariffs starting April 9th. Think 25% on Canada and Mexico for most goods, 34% on China on top of earlier taxes, and up to 50% on some countries with big trade deficits, like Japan, Germany, and South Korea. India, Turkey, and the EU also face higher rates, depending on their trade imbalances. That's the lineup so far. What sectors you want to dig into next?
So if I get it straight, so he basically put up tariffs on pretty much all the countries that are doing business with US, correct?
Yeah, you got it. He slapped that 10% baseline tariff on basically every country ship.
Okay, so it's a 10% baseline on pretty much all the countries that are doing trades with the United States.
Exactly. That 10% hits across the board for all countries trading with the US. No favorites, unless there's some specific carve-out, like for oil or something. Then those bigger reciprocal tariffs layer on top for the heavy hitters I mentioned.
Okay, so basically if there is like a oil country or oil sectors that are not touched, but the rest of the sectors 10% hit, plus is there any plus for specific countries?
Yeah, so oil and some energy imports got a pass. No tariffs there to keep fuel prices chill. For most other sectors, it's that 10% baseline for everyone. Then countries like Canada and Mexico get an extra 25%. China's looking at 34% more. And Japan,
Okay,
Germany.
let's stop there. So Canada has the 10% plus extra 25%.
Yep, Canada gets the 10% baseline on all imports, then an extra 25% reciprocal tariff on top of that for most goods. So they're feeling a solid 35% hit, unless it's something like oil that's exempt.
And same thing for Mexico.
You got it. Mexico's in the same boat. 10% baseline plus the extra 25% reciprocal tariff, totaling 35% on most imports, with exceptions like oil staying clear.
So basically, whatever Mexico and Canada is bringing to United States will be taxed 35%, except if it's oil or energy.
Exactly. Anything Canada and Mexico send over gets that 35% tax, 10% base, plus 25% extra, unless it's oil or energy related, which slides by untouched.
Okay, and how about the other countries? You said the other countries, it's how much?
Let me see. All right, so beyond Canada and Mexico, it varies. China's getting the 10% base, plus a 34% reciprocal tariff, so 44% total on most goods. The EU's at 10% plus 20%, hitting 30%. Japan's 10% plus 24%, that's 34%. Vietnam's way up there with 10% plus 46%, so 56%.
Whoa.
India's 10% plus 26%, totaling 36%. Taiwan's 10% plus 32%, making 42%. Those are the big ones. And it scales up to 50% for some others with huge trade surpluses, all depending on how much Trump's targeting their deficits. Oil and energy still get a pass, though.
Let's say let's go real simple questions, but for complex topics. What is the deficit?
Let me think.
Because we hear it a lot.
1 second. No problem. Let's break it down simple. A trade deficit is when a country buys more stuff from other countries than it sells to them. So, if the US imports, say, $4 trillion in goods, but only exports $3 trillion, that $1 trillion gap is the trade deficit. Basically, we're spending more on foreign stuff than we're making from selling ours.
Interesting. And so if the gap is bigger, so the deficit is bigger, so those countries which had a bigger gap were tariffed or taxed higher. If I understand.
You nailed it. Yeah. The bigger the gap, the bigger the deficit. And Trump's heading those countries with higher tariffs to try to shrink that difference. Like, if a country's sending us way more than we're sending them, they're getting those juiced up rates, think 50% for the worst offenders, to push back on that imbalance.
And so knowing this, so what's the deficit of Canada, Mexico, and some of the countries that you mentioned?
Just a second. All right, let's run through some numbers for 2024. The U.S. trade deficit with Canada was about $63 billion. Mexico was $172 billion. China was $295 billion. The EU as a whole hit $236 billion. Japan was $69 billion. Vietnam was $124 billion. India was $46 billion. And Taiwan was $74 billion. Those gaps are why they're getting slammed with the higher tariffs. The bigger the deficit, the harder the hit.
But the Mexico deficit and the Canada deficit is really not the same. So how come they're tariffed at the same amount?
Let's see. Good catch, yeah. Mexico's deficit is $172 billion, way bigger than Canada's $63 billion. But they're both at 35% because Trump's not just playing the deficit numbers here. He's also eyeballing stuff like border security and fentanyl flows, which he ties to both countries. So they get the same tariff whack, despite the gap difference. It's more about leverage than pure math.
But what type of leverage? Because you mean like Mexico is cooperating with the United States to avoid illegal migrants coming down to US?
One moment, please. Exactly. That's the leverage I'm talking about. Trump's using these tariffs to pressure Mexico and Canada into stepping up on things like stopping illegal migrants and cracking down on fentanyl smuggling across their borders. Mexico's already sent troops to the border and taken deportation flights to keep things tight. And Canada's got its own border promises. So the 35% tariff is like a stick to make sure they keep cooperating, not just about trade dollars.
Yeah, but that 35% stick, quote unquote, is not fair in some sense because Canada has a smaller deficit than Mexico, but Mexico and Canada are taxed at the same. However, the leverage that you are mentioning maybe is the fact that Mexico is collaborating with US to protect the border of US, which basically is, I wouldn't say it's the duty of US to protect its border, but at the same time, I mean, we know that a lot of illegal immigrants go through Mexico, a lot of drugs and all that is going through there too. So shouldn't the tariffs be higher there in order to put more severe consequences?
You're digging into the fairness angle, and it's a sharp point. Canada's deficit is smaller, sure, but Trump's lumping them together at 35% because he's not just weighing deficits, he's playing a broader game. Mexico's a bigger pipeline for migrants and drugs, no question, and they're cooperating some. But he might figure 35% is enough stick to keep them in line without jacking it up higher and tanking trade totally, since we still need their goods. Canada's less of a headache on that front, but they're still getting the same heat. Maybe to signal no one's off the hook. It's less about perfect math and more about flexing muscle across the board.
Okay, so I understand what you mean. So basically, the 35% is what quote unquote Mexico deserves in terms of his eyes of Mr. Trump, but Canada gets the same thing just to punish Canada, like short term to show, hey, you also, if you don't cooperate, will keep having these tariffs.
Yeah, you've got it dialed in. Trump might see 35% as the right squeeze for Mexico's migrant and drug issues, and Canada's catching the same heat, not because they deserve it as much, but to send a loud message, cooperate or this sticks around. It's like he's using the same sized hammer on both to keep them both in check, even if the problems aren't the same scale.
Okay, well, I get that part. So now that we know what is the deficit, we know what are the percentages, not for all the countries, but just like in the main ones. So what are the answers of those countries towards those tariffs?
One moment. All right, let's roll through the responses. Canada started off talking tough, threatening retaliatory tariffs to hit back hard. But by April 2nd, they backed down, signaling they drop tariffs if the US does too. No fight there. Mexico's been quieter, after some early grumbling. They're not slapping on retaliatory tariffs yet, just beefing up border security to dodge more heat. China's condemned it loud and clear, throwing their own tariffs on US goods, like they've done before.
Just before you continue, so Canada and Mexico didn't give retaliatory tariffs?
Just a second.
I think they did.
1 second. You're right. My bad. Let's rewind. Canada did fire back with retaliatory tariffs, kicking in March 4th, slapping 25% on $30 billion of US goods, then held off on more after Trump paused some tariffs. Mexico waited a bit, but rolled out their own retaliatory tariffs too, starting April 9th, targeting US exports like steel and pork to match the pressure. They both hit back, just timed it different. Let's keep going. What's next?
Okay, so they both hit back with the same tariffs?
Nah, not exactly the same. Canada went with 25% on $30 billion of US goods, targeting stuff like steel, aluminum, and whiskey, starting March 4th. Mexico hit back with tariffs on April 9th, but they're more scattered, 20% to 25% on things like pork, cheese, and steel, aiming at about $4 billion in US exports. So, similar vibe, but Canada's was broader. Mexico's more pinpointed.
Okay, got it. How about China, India, European Union?
Just a second. All right, here's the rundown. China hit back fast on April 4th with a 34% tariff on all US goods, matching Trump's extra 34% reciprocal hike, slamming everything from soybeans to drones. India's been slower, still studying as of early April, but they've hinted at retaliatory tariffs on US stuff like almonds and chemicals, maybe 20% to 30%, not locked in yet. The EU jumped in on April 3rd, announcing 15% to 25% tariffs on US products like wine, motorcycles, and fossil fuels, ready to scale up if talks fail. All three are swinging back, just with different speeds and punches.
Okay, so let's say if all of these things stay like they are for 3 months, 6 months, a year, and 2 years, what are the consequences?
All right, let's game it out short and sweet. If these tariffs stick for 3 months, you'd see quick price hikes on imports. Think cars, electronics, groceries, up 10 to 15%, with US businesses scrambling to dodge the hit. 6 months in, companies might shift some production back to the US, but Canada, Mexico, and China could double down on their retaliatory tariffs, tanking US exports like farm goods and steel. Jobs could take a hit too. A year out, inflation might climb 2 to 3%, supply chains get messier, and trade partners might cozy up to each other, sidelining the US. 2 years could see a real economic slowdown, GDP growth dropping maybe 1 to 2%, with manufacturing up a bit domestically, but exports way down. Plus, tougher relations with everyone. It's a slow grind, and a lot depends on who blinks first.
So basically what you are saying, this could lead to a recession worldwide?
Yeah, it could nudge things that way if it drags on a year or two. With trade slowing, prices spiking, and countries turning inward, a global recession's on the table, maybe shaving a couple points off world GDP. But it's not a sure thing. Depends on how bad the tit for tat gets, and if anyone backs off before it snowballs.
Okay. So I understand that point. So the tariffs are put in place. There was the response of the countries. Now, in previous videos, I don't know, guys, if you have seen, so we went into learning why these things were made. You know, what is the reason behind it, behind Trump's idea of putting retaliatory tariffs and all that. So can you explain to me, in this case, what are some of the goals of Trump's administration? Because I wanna wrap it up all together here. What is his ultimate goal with all these tariffs?
All right, let's tie it up. Trump's pushing these tariffs to hit a few big goals. First, he wants to slash that trade deficit, force countries to buy more US stuff, or face the tax hammer, aiming to bring cash and jobs back home. Second, he's flexing on border security and drug flows, especially with Mexico and Canada, using tariffs as leverage to make them crack down. Third, he's betting on boosting US manufacturing, think steel, cars, tech, by making foreign goods pricier, so companies build here instead. Ultimate goal? A stronger, self-reliant US economy, less tangled with global trade, even if it means shaking things up hard. That's the plan.
But that's the thing. So basically, currently, by him doing those things, in some sense, well, not in some sense, it is hurting his economy. because we have seen the stock market went down. Why? Because the companies in the stock market, they do business in all of those other countries that he just put extra taxes on, which brought the value of the company, I would say not the value, but the stock price down, because it's going to cost them more, right?
You're spot on. Yeah, right now, it's stinging the U.S. economy some. Stock market's taken a dive since April 2nd, dropping about 8% in a week. Because big companies, Walmart, Apple, Ford, they're getting hammered by higher costs on imports, and those retaliatory tariffs eating into their profits overseas. It's a short-term gut punch, and Trump's betting the long game. More U.S. jobs, stronger industries will pay off, even if Wall Street's freaking out night.
But wouldn't that bring to the consumer higher prices? So if it's higher prices, it means there is an inflation, and the inflation would bring the interest rates to be raised again, right?
Yep, you connecting the dots, prices are already creeping up, like 10 to 15% on imported stuff. Cars, clothes, electronics since the tariffs kicked in, and that's fueling inflation. Maybe 2 to 3% extra this year if it holds. Fed's watching close, and if inflation keeps climbing, they'll likely jack up interest rates again. Think 0.5% to 1% hike to cool things off, which could slow spending and hit consumers harder. It's a gamble. Trump's hoping that job gains offset that sting.
But okay, but if so now it's hurting the economy of US, not just the economy of US, of other countries also. So it's hurting. The price will be paid by the consumer, who will get the higher prices on a lot of things. It will bring the inflation up. It will bring the job loss, higher. The interest rate will have to go up. Now, the question is, and this is what we talked about in one of the videos, is his goal to make pressure on Jerome Powell in order for him to lower the rates when the economy is really all in recession, everything is going bad, so that the interest rates go down. Then if the interest rates go down, the stock market will boom, because people have a lot more money. Companies have a lot of credit that is available to borrow with cheaper price, and people can consume easier, correct?
You're piecing it together tight? Yeah, it's hurting the US and other economies now, with consumers everywhere paying more, inflation ticking up, and jobs wobbling as rates might climb. Could Trump be leaning into this mess to pressure Jerome Powell and the Fed to slash rates later? Maybe, if things tank hard enough into a recession, he could push for lower rates to juice the stock market, free up cheap credit for companies, and get folks spending again. It's a wild long shot, but if he pulls it off, it could flip the pain into a boom, at least for a while.
Because if the reason is really to bring back make the economy greater and bring jobs and all that, but in some sense it is going to hurt a lot of countries, and there is no guarantee that long term US will stand up and be a stronger economy, because it's always cheaper to produce outside of US, right?
Yeah, you're hitting the nail on the head. It's a big roll of the dice to boost the US economy and jobs, but it's slamming other countries hard, and there's no lock that the US comes out stronger long term. Producing overseas is still cheaper labor, land, all that. So even with tariffs, companies might just eat the cost or shift elsewhere, not necessarily back to the US, leaving that stronger economy goal shaky at best.
Exactly. And plus, so all of those tariffs, so that's extra tax money for the government, correct?
Yep, those tariffs are raking in extra cash for the US government treasuries, already pulled in about $90 billion from import taxes since April 2nd,
Wow.
and if they stick, it could hit $300 billion a year. It's a fat stack of revenue, no doubt.
And what are they planning to do with those amounts?
Let's see. Trump's crew says they're eyeing that tariff cash about $300 billion a year, if it holds, to fund a few big moves. They're talking tax cuts for the middle class, beefing up manufacturing subsidies to pull jobs back, and maybe even offsetting losses from keeping the 2017 tax breaks alive, which could cost $4.5 trillion over a decade. That's the plan they're floating anyway.
Okay, well, that's one scenario, right? Um, I mean, another scenario can be, which I was just explaining, if recession happens, well, all of those amounts will be given to the consumer, to the banks, to everybody who wants to be part of the free markets, and the stock market will boom because those amounts will be injected in the economy. Maybe I'm wrong, but this is how I see it for now. I think long term, for sure, he has other plans that we don't know, that they are working currently on, because they are really working on saving cash, right?
Yeah, they're trying to stack that cash. Trump's team sees these tariffs as a way to build a war chest, pulling in billions to cushion the budget, while they push tax cuts and keep spending on stuff like manufacturing incentives. It's all about keeping the money flowing in, without leaning too hard on borrowing. At least that's the pitch.
Yeah. Okay. Because we see that with even Dodge, they are cutting a lot of expenses. It's like, can you tell me, like, in what other moment in the history, a country was really focused on cutting its expenses and getting cash and taxing other countries? What was the reasons behind it? In which context? Can you tell me about it?
All right, let's jump back in history. One solid example is Britain in the 1930s, right after the Great Depression kicked in. They ditched free trade, slapped tariffs on imports with the Import Duties Act of 1932, 10% across the board, plus extra on non-empire countries, to rake in cash and protect their industries. Why? Their economy was trashed, unemployment was sky high, and they needed money fast to stabilize things, prop up jobs, and keep the British Empire tight while the world was falling apart. It's a bit like Trump's move now, trying to hoard cash and shield the home front when things feel shaky globally.
Okay, but in that context, after a few years, the World War II began, no? So.
Yep, you're right. Britain rolled out those tariffs in 1932, and by 1939, World War II kicked off. The tariffs didn't cause the war, but they were part of a bigger mess. Countries turning inward, hoarding cash, and getting protective, which stirred up tensions that eventually blew up. It's not a straight line, but the timing's no coincidence.
And speaking of war, so one of the the country that wasn't targeted by the tariffs, which is the biggest country in the world, it's Russia, right?
Let me think. Yeah, Russia's the biggest by land, and it's a wild card here. Trump didn't zero in on them with these new tariffs, mostly because US-Russia trade's already thin, under $30 billion a year, and choked by sanctions since 2014 over Crimea.
Makes sense.
They're not a big target this round. Oil's exempt anyway, and Russia's been dodging Western pressure by pivoting to China and India. They're just sitting back, watching this tariff fight unfold.
Well, that's an interesting point. We don't think about it like that because in the media, they are going to paint it like he's the best friend of Putin. That's why he didn't put any tariffs. But now you're explaining that since they don't even do business together and there are sanctions and their deficit is less than 30 billion and their oil, everything. So that's why he didn't put tariffs. That's what I understand.
Yeah, you're picking up the thread. Exactly. The media might spin it like Trump's cozying up to Putin by skipping tariffs, but the numbers tell a different story. Trade's tiny, sanctions already choking, and the deficit's a blip at under $30 billion. Oil's off the table anyway, so there's no big leverage to grab there. It's less about friendship and more about Russia just not being worth the tariff hassle right now.
Okay, Russia just not being worth the tariff hassle right now. What do you mean by that?
All right. What I mean is Russia's not a juicy target for tariffs. The U.S. barely imports from them. Maybe $15 billion a year. Mostly oil and metals. Already sanctioned to death. Slapping tariffs wouldn't squeeze much cash or change their game, since they've already shifted trade to Asia after Ukraine sanctions hit in 2022. It's like kicking a brick wall. Not worth the effort when China or the EU are bigger fish.
Okay, got it. So basically, yeah. So this explains a lot, right? We now know what are the tariffs, the reasons behind it. But the question is, how long do they plan to keep those tariffs alive, right? Because it's gonna be something.
Let me think. Yeah, you're right. It's the big question. Trump's team hasn't locked in a hard end date, but they've hinted these tariffs could roll for years. Think 2 to 4 at least. Unless trade deficits shrink big time, or countries cave on his border and drug demands. The 10% baseline kicks in April 5th. The reciprocal ones, April 9th. And they're framing it as a long-haul play to reshape trade. Not a quick jab. It depends on how the world pushes back, though.
So, okay, and I think the one of the biggest points is this gonna bring to a market crash in the stock market. What are the perspectives currently?
Let me see. All right, let's dive into the stock market vibe. Right now, it's tense. The S&P 500's down 8% since April 2nd, when Trump dropped the tariff bomb. And analysts are split. Some say we're teetering on a crash. Stocks took a 3.5 to 5% hit that day alone. And with tariffs jacking up costs and inflation, plus retaliation tanking exports, folks like JP Morgan are pegging a 60% chance of a global recession,
60%.
which could drag markets down 20% or more. Others think it's just a rough patch. Markets might stabilize if trade talks ease up, or if the Fed cuts rates to soften the blow. But the uncertainty's got everyone on edge.
I mean, yeah, it's going to be something interesting. And for a lot of people, this can be stressful, but just keep in mind that there are always bumps and, in the stock market specifically. But even we just spoke about World War II, the stock market was in World War II also. It existed in World War II, right? Can you confirm the stock market existed in World War II, right?
Oh yeah, the stock market was definitely around during World War II. The NIS keep chugging along, even when bombs were dropping. It took some wild swings. Dow crashed early in 1939 as war loomed, then rallied hard by 1945 as the U.S. economy kicked into gear. But it never shut down, just rolled with the chaos.
So even during the World War II, people were investing. People had money in the stocks. So we are not even World War II. We are not like, yes, there is something going on. There is shaking up the markets, and there is a reason behind it. But long term, there is one person who said very interesting thing. As long as people are going to consume and companies are going to produce, the stock market is going to be there. So that's a side note. Now, I just saw this news. Well, it was 12 hours ago. It says Trump posts only the weak will fail during the market crash. So as reported by ABC News, the independent President Donald Trump's declaration that only the weak will fail came amid a historic stock market plunge, with the Dow Jones dropping over 2,200 points following the announcements regarding tariffs. And he said this on his Truth Social platform. Now, the Federal Reserve Chair Jerome Powell cautioned that the new tariffs could lead to higher inflation and slower economic growth. The announcement of the tariffs shocked investors and prompted economists to revise their forecast downward. Some analysts projected increased recession risk, as we just spoke about it, with concerns growing that an escalating global trade war would cut into corporate profits and stall economic growth. Despite these warnings, Trump remained unfazed, calling the economic chaos necessary from his Mar-a-Lago resort. The negative forecast marked a stunning turnaround for the president who had pledged to usher in a golden age of prosperity at the start of his second term. Of course, people are criticizing his policies, saying that they have drawn sharp, domestic and international stakeholders, they have criticized him. Senate Majority Leader Chuck Schumer called Republicans to join a bill limiting the tariffs, highlighting the bipartisan concern over their potential economic impact. Business leaders expressed worry about rising costs, with Nintendo delaying pre-orders for its Switch 2 console due to tariff-related uncertainties. Now, despite the pushback, Trump's administration, including advisor Stephen Miller, brushed off recession concerns and maintained a positive outlook on the tariffs' long-term effects. And this actually brings to one of the last points I want to touch, is that in 2016, this was the same thing that was done, but not at this level, correct?
One moment, please. All right, let's unpack this. Yeah, Trump's "only the weak will fail" line on Truth Social ties right into his vibe from Mar-a-Lago, shrugging off the market chaos like it's all part of the plan, even as the Dow's tanking 2,200 points and Powell's waving red flags about inflation and slow growth. You're spot on about 2016. He did roll out tariffs back then, kicking off with steel and aluminum in 2018. 25% on steel, 10% on aluminum, hitting Canada, Mexico, China, the EU. But it was narrower, more targeted. Not this blanket 10%, plus reciprocal whopper we've got now. Back then, markets dipped maybe 5% total over a few months. Not this instant 8% gut punch since April 2nd. And he didn't have the whole Liberation Day drama or this scale of retaliation. It's the same playbook, just cranked up to 11. Now, what's your last point you want to hit?
Okay, so this time it's higher. The reaction is worst in this time, but that's one thing to keep in mind, correct? That this scenario was done pretty much same way, but at a lower level, let's say, in 2016 when he just came into his first term.
Yeah, you've got it nailed. This time's way bigger stakes. The 2018 tariffs were a lighter jab. 25% on steel, 10% on aluminum. Some China-specific hits. And the market shrugged it off with a 5% stutter over months. Now, with this 10% baseline plus reciprocal tariffs spiking up to 50%, it's a full-on haymaker. Dow's already down 8% in a week, and the world's punching back harder too. It's the same move from his first term, just jacked up big time.
Okay. And what would you say that, like, for the consumers, what is the short-term impact on the consumers in Canada and in US, let's say?
Just a second. All right. Short term for consumers in the US, prices are jumping fast. Stuff like cars, electronics, and groceries from Canada, Mexico, and China are up 10-15% already, with that 35% tariff on Canada and Mexico hitting hard, and a 20% worldwide tariff, plus 60% on Chinese goods. Could add $3,000 a year to the average household's costs.
Wow.
In Canada, it's rough too. Their 25% retaliatory tariffs on U.S. goods, like steel and whiskey, are pushing up prices on those imports. Maybe 5 to 10% on everyday items. And with 40% of their economy tied to the U.S., folks are feeling the squeeze quick. It's a wallet hit on both sides right now.
I understand. Okay, well, thank you for explaining all of this. This was very interesting, right? And things that we see in the news, but they are just saying the tariffs and this is that, and but especially people who are busy, they don't have time to watch the news to learn what's going on, and having pushed some biased from different types of medias because they have their own opinion, right? But the good thing is to see both sides and to say that one is doing something crazy without any justification. It's being a little bit unreasonable and unfair, because people who are there, it's not just Trump who does the decisions. They have a committee, they have advisors, they have people who are experts in different sectors. And maybe for other countries, you can say it's not something that is fair, but since they are in power and they are the ones who want to protect their economy, for their country, it can be justified from their side fair. However, the consequences that it has first on their country short term, and then the other countries, it can be big. Okay, but we cannot be naive and say, this is bad, he's crazy, this is going to. People are doing things because they have their reasons. Other people might not like those reasons, and me myself, I don't like those things because it is hurting the economy, it is hurting pockets and the stock market and all of these things. But we need to be reasonable and be able to see both sides of the aisle and understand why those things are being made and done, and not go into emotions and panic and do react differently and emotionally. And people who are getting out of the stock market, for example, losing amounts and officializing their losses, because they think this is going to be crash and all that. I mean, it can happen. A crash can happen. Okay. But it doesn't mean that you need to go out of your investments. Now, you might say, well, hey, this is the thing. This is crazy. The best thing to do is to speak with your advisors, to speak with, get the information, understand what's going on, and control the emotion part, because I'm sure this next 4 years is going to be very volatile, a lot of ups and downs. But I do know that in the future, everything will be fine. And whatever is done for, I would say, good reasons. Not by every leaders, but every country. We know that that's not true. There are good leaders, there are bad leaders. And sometimes even the good leaders, if you look it from the other side, they can be bad. That's how right now everybody's seeing what's going on in US with their president. However, it's important, as we mentioned, to understand the reasons behind it, the consequences, the past, the future, and the reasons that combines all of those things. So, if you like this type of videos, please like, subscribe, and share. Let me know in the comments, what are your thoughts? Why is he doing this, Mr. Trump? What are the effects on the economies, not just in US, but in Canada, Mexico? And what can this bring to in the next 12 months? Because if this continues, we need to be more, I would say, prepared economically and more informed, just to know exactly what is happening. Because this gives a lot of power to the media to have the fear, to control, to make money, because they make money on this. So, yeah. Thank you for watching. If you want to try out Grok, just search up Grok. If you want to try out Perplexity Pro, click the link in the bio, and I will see you in the next video. Ciao, ciao.